us today on another edition of Let's Get Savvy. I am Vince Guiliano with SAVI Real Estate Group, and today I am happy that we are joined by a special guest, Colin Valentine from Bricks Mortgage. And Colin, welcome to the show today. Thank you for joining us.
Thanks a lot for having me, Vince. I'm really happy to be here.
Perfect, thank you. So again, we do these every second Wednesday of the month at 10 a.m. We do them live. We repost them. People, send in your messages, send in your questions throughout the month, and we'll get to them on the very next show. So Colin's here with us today. Colin, you are in the finance game in real estate.
Yeah.
Obviously, our industry and your industry work directly together. So some of our listeners have some questions for you today that I'd like you to answer for us or give us your best opinion on. And hopefully we can help some people out here and get them in some better positions.
Yeah, it's all about sharing education. That's how you get your clients win.
Perfect, thank you. Okay, so first, actually, Colin, why don't you tell us a little bit about yourself, what you do, so that our listeners can get to know you a bit.
Sure. So I'm a mortgage agent with Bricks Mortgage, as you mentioned. So I have been a real estate investor. My wife and I have got multiple real estate properties. We've been investing for 24 years now. Multiple holdings in multifamily and single family, and ended up going into the mortgage space as I was dueling in between my full-time job in digital marketing and doing real estate, and I became a mortgage agent, and I moved to Bricks about 2 years ago, and it's now Canada's fastest growing mortgage brokerage in Canada. Fabulous company, and it's very client specific and client oriented, and I love it because it puts our customers front and center, and that's what it should be.
That's great. I feel like it's a seamless fit between our two brands because we're the same way. It's all about the client and the customer and putting their needs first, and then everything else will follow after.
We don't win if our clients don't.
For sure. So Colin, we'll get right to some questions here. So
yeah,
very common one that we get all the time. What is the difference between using a mortgage broker or going through a traditional bank for a mortgage?
That's a really good question. So a mortgage broker or mortgage agent, we work for our clients. We actually don't work for a bank or a financial institution, so we don't get paid by our shareholders. And we don't get paid by our clients. So 99% of all of our files, somebody comes to us, we take all of their information, we put together a business case, and we shop you as a buyer to all the different lenders. And we find the best mortgage that fits your needs. And when we place that mortgage, everything's closed, we get paid a commission from that financial institution for having brought it. So we work for our clients. That's the big difference in terms of what it would be between a bank and an agent. On top of the fact, we work with multiple lenders and have hundreds of mortgage products that we can put clients into. So it's not necessarily what the bank has. It's actually far more. It's going beyond, because now it's what's the best mortgage that fits your needs, and then we can start examining from there. So hundreds of products to take a look at.
That's great. So rather than just being stuck with one mortgage choice or a variable or fixed, whatever it is, you have an open options of whatever fits the client the best.
Yeah, and the filtering down from those options, going from hundreds of mortgages, saying, okay, hey, let's narrow this down to the top 4 that fit you, what lenders fit you, and what are the parameters and specific funding needs, and all of your priorities in life, your financial, your personal, your family, all of those guide down to, hey, this looks like the most solid mortgage option for you. Here are the rates that we have onto it. Let's go take you to the bank and get you funded.
Excellent. Okay. Well, that's great. That really answers that question really well, because I know that we get asked that as agents, so I'm sure that you get asked that. Now, we do have a question from a viewer, and again, this is probably the equivalent for you of what is my house worth for us, but I bet you get this all the time. What is the best rate that I can get for my house, or to get a house right now?
Yeah, and that, I get that question all the time. I equate it sometimes. It's like when you're driving to the mechanic and you're on the phone, you say, my car's making a funny noise. How much is it going to cost to get fixed? Until we look under the hood and look at the engine, we really don't know. Yeah. So we were chatting this morning. I said, I saw a rate this morning at 4.34%. Really low rate. But would a 6-month mortgage suit you? So really the question isn't necessarily the first one, the best rate. It's like, here's my scenario. What's the best mortgage that suits my needs? From there, what's the best rate that fits that mortgage type? So it is a pertinent question, but it's probably secondary and not primary.
Right. Okay. Yeah, no, that's great. I mean, same thing with us. It's, you know, what can my house sell for? It's very hard to give someone that answer without seeing, you know, all of the stuff around and doing a deep dive rather than just giving them an off the cuff type of answer, right?
Yeah, and I my caution would be when you get an off the cuff answer, or if you go online and you find something, your house is worth $500K. Well, in reality, you go and visit, and we're like, this is a $750K house. Yeah. Or, you know, say you go for a mortgage, and we're like, I'll get you a $399 mortgage. And this actually happened in the winter. There was a lender that had a $399 mortgage. Brilliant rate. Mm-hmm. But if you took that mortgage, when it renewed, you had to go back with that lender, and you were paying a 1% premium for the next 5 years. And if you left that, you had to pay the penalty for getting the lower mortgage rate. So, you know, it sometimes, if it's too good to be true, it's because it's too good to be true. There could be a catch.
Don't fall for the traps.
It's all in the details, right? Yeah. It's in the details of your home and analyzing it to get the price. It's in the detail of the mortgage and what's your scenario and what best fits you. And that's our job, is to look at those details.
Perfect. And are you finding, you know, I know at one point, variable mortgages were kind of just taken over, and because the rate was so good, and then as rates have come up now, I think people are, at least from what we hear from our side, people are becoming a little bit more hesitant with the variable mortgages because they feel like there's so much change that they don't want to be wondering what's happening. What are you seeing right now? More variable, more fixed?
And you know, it's a great question. And you know, if you asked me a year ago, I was no variables, and I wasn't putting people into them because everything was so volatile. Right now, as we are seeing some indicators, and we are seeing the Bank of Canada rates come down, we are seeing lenders that are finally doing prime minus, where it was always prime plus recently. So variables in the heyday of all COVID and that fabulous low interest rate, everyone was going variable in regards to that because it was a specific advantage to it. And then more recently, the trend has people doing shorter term mortgages because we are expecting rates to decline. So there was a big trend moving towards 3-year. Now that we're seeing mortgages come into the mid 4s and we are seeing variables coming down, I actually am placing some clients into variable mortgages. And again, because they might have a strategy saying, we're going to be moving in a year. Well, great, the variable will be a low penalty for you to get out. So that's a much better scenario than taking a fixed one and having to pay the breaking fees. So it becomes situationally dependent. However, I am seeing variables now start to come back up as options for people to take.
Yeah, I from what we're hearing, you know, people get excited about there's going to be a rate drop in June, there's going to be a rate drop in July. I find that sometimes they don't want to lock into a fixed rate because they think that there's going to be this big drop again, rather than, you know, like a quarter point. And you know, we talk to our clients about it. When you could get a great deal on a house and you get a fantastic price, not to worry about that quarter point of a rate as much, because it's going to be a wash in the end. If rates come down, price of houses go up, and you end up paying probably around the same amount.
Yeah, sometimes it's a $50 wash.
Yeah, exactly.
And I find a lot of people get confused in terms of the Bank of Canada rate announcements. So that is specifically targeting the prime lending rate. So that's affecting your variable rate mortgages the most. Mm-hmm. The 5-year bond yield, that's what affects your fixed rate mortgages. So they are two independent systems. Yes, they can have influence on each other. However, there's actually two different metrics. So a lot of people will get confused. The Bank of Canada announced a quarter point drop, and they're expecting all the fixed rates to drop a quarter point. And we're like, well, no, actually it's not quite that way. Yeah. There's some subtlety in there, but the variable's prime, fixed is bond rates.
That's exactly what people think. It's, the rate came down. My rate's going to go down quarter percent when when I go to renew my mortgage or whatever it is. It's we get that all of the time.
Oh yeah, but people like me that have variable rate mortgages are like, woo-hoo, came down a quarter point. So for some of us, yes, that is great news because you're in that variable. Yeah. And this comes back to your question earlier. Are variables becoming more popular? Well, with the expected rate drops and with the financial conditions with the U.S. on fire, and we're seeing inflation start to come under control in Canada, yes, variable are starting to become more attractive for people versus doing a 1 year, 2 or even 3 year fixed.
Yeah. Okay. What what are your thoughts over the next 6 months to year and a half? What do you kind of foresee with rates? Do you see it holding steady where it is or coming down some more? What, just based on what you're seeing right now in your industry?
Yeah, I wish I could say we would see the pandemic level rates coming back. That's not going to happen. I think we that opportunity of having those ultra low rates is now past us. At least in the midterm, we are expecting to see rates come down. We are seeing inflation coming under control. There's a huge focus on housing in Canada. And with the bond yields actually dropping at this point, we've had a rough ride on them, but they're starting to balance out a little bit. We're expecting rates to come down lower, not as fast as they went up.
Mm-hmm.
So Bank of Canada was really quick to raise them. That dropping is going to be a slower progression over time. However, we should start to see them coming into, ideally within the next couple of years, heading into the 3s and the low 4s.
Yeah, okay. So, I mean, we were speaking about it earlier. One thing that we are seeing is people are coming up for renewal on their mortgages over the next, 6 months or year.
Next 2 years is a monstrous flood. Somewhere over, there's billions of dollars in mortgages coming up for renewal because of that low interest rate where everyone was purchasing.
And the ones that are waiting for the rates to drop because they, when they're coming up for renewal, they're just kind of waiting and they're saying to us, I'm going to see what happens when that time comes up for my mortgage to renew, and then I'll make a decision at that point. What would you, I know what I say to that and what I tell our clients. What are your thoughts on that? When should they start pre-planning for a possible change? But some people are going to be double their interest rate on their mortgage, and that might be putting some people in a tough position. What are your thoughts on that? When should people start looking for different mortgages or looking for renewals in advance?
And great, and this comes back to why would you use a mortgage agent versus the bank. So if you go into the bank and you say, hey, I want to renew my mortgage, they're going to be offering you something on the spot, take it, break and go. With a mortgage agent, the ideally, you should be prepping and examining and getting all your paperwork and everything in order 6 months in advance. And why in advance? Again, we're not looking at just a simple transaction. The idea is meeting with potentially your accountant or your financial advisor or your realtor and understanding what's your situation, what are your financial needs, and then we can come up with a plan and a strategy.
Yeah.
Meanwhile, if rates decline, and we say you go in and you put an application, and we can go in and do a rate hold for you, and we can hold that rate. If rates go down, you still get the lower rate, but if rates go up, you're protected.
Yeah.
So we can lock something in, hold it for you, have that insurance policy of hey, not a problem. Meanwhile, you're taking advantage of the lower ones.
Right.
But it takes that last minute panic and stress off of people. I hate to say it, but everyone here has a cell phone bill. When has your cell phone company ever turned around and said, you're such a loyal customer, here's a discount? It doesn't happen. And that renewal letter that comes from the bank, and I see it all the time that comes in, and the renewal letter comes in, and it's not their best rate.
Yeah.
It's the rate they would like to get you on because their shareholders need to make money.
Yeah.
So it's not always the best scenario. And I've had a nice advantage recently where I've had a couple clients that have come in and I'm like, this is a great mortgage rate. Take it. Let's meet again in a year. So we get a chance to analyze, look at things, and provide the advice. But it's that lead time you need.
Yeah.
And that 6 month window is ideal. It makes it very much less stressful.
Yeah. And I mean, it's great to hear that even when you're not getting any advantage of telling them to go ahead with their bank because it is the best scenario for them, you're still helping the client. And you know what, they end up coming back to you in the long run because you build that trust with them. But, it may not be immediately your customer or your client, but again, when you're doing what's best for the client, they do tend to, always trust you.
Yeah,
afterwards.
well, I would twist that just slightly. It's they're still my client.
Yeah.
My goal is to have a client for the lifetime of their home ownership. It's not a simple transaction. So if you have a bank teller that became a mortgage agent that sold you a mortgage, you're probably never going to see or hear that person again because they moved on to a different role. No, that's not who I am, and that's not how we function. So as an agent, our ideal is helping to guide and manage you through the entire life cycle of your home ownership to get you the best deal and get you financially ahead.
That is amazing. I mean, with what we were just talking about in terms of the rates changing and renewals coming up, I think that it's a great opportunity, to get in touch with Colin, he can help you figure out if there's, I mean, if everything is going to be fine when your mortgage is coming up, or if there's going to be some, some hard decisions that you have to make. And at that point, we can also step in and, maybe you have to relocate or move or something like that. Maybe, there's different options that you can do with your mortgage that Colin can help you out with. So, no, I appreciate your time today, and I feel like it was very informative for our listeners, because we're always talking about the real estate end, and again, we work hand in hand with the finance side, but sometimes our buyers and sellers don't get enough of this information, right? And so I really appreciate you being on the show with us today. And we're gonna have at the bottom of this post, we're gonna have all of all of Colin's contact information, so that you can get in touch with him, and we'll have him on the show again. So I just, again, want to thank you for your time today. I appreciate it. And thank you for joining us. Again, Let's Get Savvy, every second Wednesday of the month at 10 a.m. We are live. We repost it so you can view it at any time. Again, Colin's information with Bricks Mortgage, he will be at the bottom of the post here, so you can reach out to him directly or reach out to us directly, and we'd love to help you out. Thank you for joining us again today, and we'll talk to you soon.